A warm welcome to all the participants, panelists, and the audience. Today, we are going to have a session on IBC valuation processes and challenges. This topic is much contentious and time-taking process. So we got a lot of requests from the participants that it's been a while to have an IBC valuation. Hence, this session. It's my privilege to introduce today's panelists. Mr. Ravi Devarkonda is one of the panelists for today's session. He's a very senior member. He's a chartered accountant, company secretary, cost accountant, and graduate in law with over 40 years of experience in manufacturing, trading, finance, and infrastructure sectors at senior levels. His experience includes as CFO and company secretary in Tanirbavi Power Company, which is GMR Group, and Nice Toll Road, Kalyani Group. Presently, he is practicing as a chartered accountant. He is also qualified IP, registered with IBBI. He is empaneled as IP with all major nationalized banks. At present, he is appointed as resolution professional in respect of 1 and as a liquidator in respect of 3 assignments under IBC. He is also a registered valuer. He has conducted valuations for startups, allotment of shares under Companies Act, income tax, and IBC. He is also an independent director in 2 of the Soma Group companies. He was an examiner for the examinations conducted by ICAI and ICSI. We welcome Mr. Ravi Shankar.
Thanks.
Next panelist is Mr. Ravindra Beleyur. He is currently the proprietor of Beleyur and Associates Chartered Accountants and whole-time director of Beleyur Resolutions Private Limited and IPE based at Bangalore. He's currently focused only on work related with IP, and his firm is focusing on strategy management consulting during 2005 to 2017. He has overseen 3 successful resolutions and liquidation of 4 companies to date. Mr. Ravindra was working in various industries for 16 years up to 2003, which included the turnaround experience in company in Indonesia after Southeast exchange rate crisis during 97-98. He did his full-time MBA from Cranfield School of Management, UK, after his turnaround experience during 2003-04. Mr. Ravindra Beleyur, we welcome you to this session.
Thank you.
Our third panelist is Mr. Nataraja Nanjundia. He is a practicing cost accountant, IBBI registered valuer, IP, International Business Valuation certified from IACVS and IAM Calcutta alumni. He executed a variety of valuations, including startup, M&A, FEMA, ESOP, and IBC. He has done startup advisory, including financial modeling and strategies. He has handled CIRP process as IRP and RP of real estate company and has submitted resolution plan for the approval of NCLT. He is a faculty on valuation subject with ICMEI, RVO, IACA, ACVA, and seminar room. He has authored a chapter scorecard method of startup valuation in the book Practical Guide to Startup Valuation, published by Springer Global Publication. His corporate experience has been, he has started his practice and has worked for 25 years in corporate sector. He has worked with ADP, Infosys, BPO, Amazon, and Deutsche Bank. He has worked in the area of finance, accounting, operations, transitions, and process transformation, has successfully led global projects. He is a founder of Nataraja Nanjundia and company focusing on costing services, business valuation, financial modeling, process transformation, accounting, taxation, payroll, and insolvency services. We welcome you, Mr. Nataraj.
Thank you, Shilpa. Thank you so much.
For this today's panel discussion, the moderator, Mr. Venkata Subbarao Kalva, is an ACS, LLB, IP, and registered valuer. He has graduated from Nagarjuna University in Commerce and fellow member of ICSI. He is also LLB graduate from Nagarjuna University and MBA from Pondicherry University. He is also certified IP and registered valuer SFA category. He is in this profession having 20 years of experience. His advisory services include corporate law, insolvency law, valuation, legal contracts and litigation, setting up of new business, and acting as resolution professional under IBC. He is also qualified as independent director. In pursuit of academic interest, he has participated in various seminars, talks, workshops, conferences, and conventions organized by Institute of Company Secretaries of India and has involved in many professional development activities. He is a faculty in company law for students pursuing CS and CA. He has a team of qualified and well-trained staff, and he is currently serving as chairman ICSI Bengaluru chapter. We welcome you, Mr. Venkata Subbarao.
Thank you, Shilpa. Thank you very much.
Now I request the moderator to take up and start the panel discussion.
Thank you, Shilpa. Good morning to everyone. First of all, thanks to Bangalore Valuer Association for giving opportunity to all our panelists and moderator to conduct this IBC valuation process, as well as the panelists especially for a shorter notice to involve in this IBC valuation. As you know that as a registered valuer, we daily discuss with the investors or the company where we do the fair valuation of the company and the fair value of the share. But whereas in case of IBC valuation, it is especially very different. How it is different, like where we have to give the fair value and liquidation value of the assets, and we need not to see any discounted cash flow or any methodology. And we are going to be appointed by the resolution professional, and we have to follow the methodologies like where we have to give the marketable saleable value. It is not that fair value by seeing 5 years, 10 years projection, and where we are going to calculate the net present value of profits and the terminal value. We have to see that the agreeable price between seller and purchaser. Okay, the entire process of IBC valuation and the Companies Act valuation is entirely different. Today, we are going to discuss about this process and the challenges, because here we are going to have that IBBI and the Committee of Creditors, and we have the resolution applicant, and it's the resolution professional. And this report, this value is going to be affected the company, the corporate debtor in so many, and it will be observed by so many stakeholders, and we need to consider all those things, and we need to prepare, and we have to conduct the process and prepare the report. And for this, we have eminent speakers. We have insolvency professional Ravindra Beleyur sir, and we have Ravi, Devarkonda, and Nataraja with their vast experience. Now I request first Ravindra Beleyur sir, like how as an insolvency professional, as a resolution professional, how you are going to appoint a valuer? Like, are you going to appoint insolvency like a registered valuer entity? And just, okay, you can give your experience in 5 minutes, sir.
Okay. Thank you. Thanks to Bangalore Valuers Association for giving me this opportunity to share my thoughts and experience. Regarding the appointment of valuers, my practice right from the beginning has been to appoint a firm or a company or LLP which does all kinds of valuation. That has been my experience, and also I make sure that if such a company has a group company which which advises resolution applicants, I avoid sending any request for quotes. So the reason why I think it is, in my view, it is very important is that there should be some consistency in the valuation. And in my view, this could be achieved if we go with the firms or companies instead of valuing individual valuers. Fortunately for me, the COCs, whomever I have been dealing with, have been able to appoint such valuers. It is a normally what I do is I send it to some 6-7 such firms or companies who are normally in the area where these assets are there, and then seek quotes. and then I place before, if I think it is a little higher or something, then I'll give an opportunity for all valuers to revise. But after I give that opportunity, I won't bargain with them, place before the COC, and it is quite possible that the top two valuers fees could be uh, 1x and 1.25x, and then accordingly I recommend for the appointment. This is my experience as far as the appointment is concerned.
Yeah. Sir, how you fix, okay, like will you take that amount, okay, who is giving high amount or lower amount, do you take it when you are considering the appointment as a resolution professional?
Whenever I seek quotes, I make it a point to request that they should give a technical quote as well as a commercial quote. So the first basis for me is the technical quote, in like their understanding of that particular assignment. How do they do it? Methodology they would adopt, and what resources they would engage. Who are the persons? So the first level is the technical bit. Then it is the financial bit. So once they qualify in the technical, naturally the financial would be the lower to the higher. That is how I would put it when I propose recommendation to the COC.
Okay. Thank you very much, sir. Sir, before coming to other points, okay, just I would like to hear from Ravishankar Devarkonda, his experience in evaluation for 5 minutes, then I will put the questions. Sir, Ravishankar, sir.
Thank you, Vivi. Thank you, Subbarao. See how we, okay, I have conducted, I've been RP and employee engaged services of RVs, and as an RV, I have been appointed by RPs for conducting the valuation exercises. So, but I work as an individual only. So even when I engage a valuer, it depends on the size of the project that you have on hand. Say this is a CD that you have on hand. If it's a big EPC company or a big power plant or any other plant which is actually in operations and all that, definitely you have to go to RVE only, because the complexities will be more and the technical depth of knowledge required in those cases which will be very high. And definitely the quotes by RVEs are much higher than individuals put together also. Three RVs put together quote will definitely be less than one RVE quote. So if you compare that to group comparison also. But at the same time, as Beleyur was saying, the quality should never be compromised, because ultimately to tell upon the outcome of the PR liquidation, whatever it is. So best thing for us is that depending on the size of the company, and depending on, again, the COC also matters, because ultimately the COC has to approve the fees. Though we are appointing, the fees has to be approved by COC to be considered as a CRP cost. Otherwise, it becomes a big issue from day one with the COC also. So what we do is that based on the size of the COC, if it's a closed company for so many years, nothing is there, then we'll engage the individual RVs. But if it's an operating company, a large size, then what is large and what is operating? Basically, if it's an operating company, definitely you should go to RVG. Because in RVG, the advantage they will also have is that if it's a fair value is not just the sum of land, building, plant and machinery and this one. There will be a consolidated effort, more linkage between the three, which you say A plus B plus C, actually fair value will be more than that. So that like RVE can do it because they know all the activities that are going on in the company. Whereas if I'm SFA valuer, I will give only SFA value. Another person will give only a land building value. But put together, the synergy value will not be showing up in that fair value thing.
Yep.
So that's why depending on the company size, but of course technically almost all the now we are already 7-8 years into IBC. So most of the RVs have done some power plants, some EPC companies, some textile mills and all that they would have done anyway. So technically maybe most of the big RVs are same, but this is what I do. Depending on the size of my CD, I'll select the RV.
Okay. Thank you, sir. Yeah. Now I request Nataraj, okay, just to give brief about how you appoint or how you take it valuation as an insolvency professional registered valuer before going to discuss the panel questions.
Thank you, BVA, for this opportunity. Thank you, sir. So basically, I would like to quote one of the example of the case which I have handled with respect to real estate company CIRP. So I want to also reflect upon the experience I had with respect to the valuation assignment as a registered valuer SFA. So first, let me talk about the experience I have had. One of the bad experience I have had. They were really good experiences. I will talk about it later. But one of the bad experience I have had is that I happened to be appointed as registered valuer by one of the resolution professional, and this resolution professional happens to be not coming from commerce or accounting background, because of which the issues what I faced is that I was not given the latest financials, even the audited financials of the previous year and the provisional financials as of the date of CIRP commencement date. So when I actually asked for these details, the resolution professional said, see, I don't understand these things. This is not my area of expertise. I have given whatever is available to you, and you have to complete it. And in my previous assignments also, previous dealing with RVs also, this has been the case. I was a bit surprised, and I actually said I can cooperate with you in terms of if you have any problem, I can help you out of my purview as not as an RV, as a professional also, to address what issues you have, but you have to give me the financials. However, that did not happen. The other thing is, there was a inventory also was part of my valuation assignment, and I was supposed to go to the site for verification. For particular reason, I was not able to go to the site. However, as I was not well, I was not able to go to the site, and we rescheduled the appointment. However, what happened is that this RP told to me that I will give you the photographs and you should be able to certify it. All these things happen. So
Yes.
these kind of discussions happened, and somehow I would be honest, I was not comfortable with this valuation assignment, and I refused to continue with this assignment. So what I am trying to throw some light here is that RP has the responsibility to collect the details and provide the details, whatever is possible. So taking the same example forward, so where I was RP, and since I know as an RP what problems we go through, I ensured that I myself prepared the financials up to the date of CIRP commencement date, though there was a delay because we had to file 19.2 and we had to follow up for the details. I ensured that all the details are available, and I gave it to the respective registered valuers, and I ensured that, I mean, I had a complete cooperation till the extent of they delivering the report. So this is something I just wanted to highlight, and we can talk up more during the session.
Yes. Yeah. Thank you, Nataraja. See, it is my question will be like to Ravindra Beleyur sir. Sir, as Natarajan mentioned, okay, getting the financial statements from the resolution professional, it is the duty of the resolution professional to give, because we need as a valuer to start the process. First, we need to have the financials. Based on that, then we can do the process, like how you are going to value the trade receivables or loans and advances or prepaid expenditure or things. Like, can you brief on that? Like, once the RP taken the assignment, like what is his duty to give the information, and if he is not going to give the information, like what precautions we need to take as a registered valuer? Can you brief on that, like responsibilities of a resolution professional?
See, I consider taking custody and control is a very important aspect of the resolution professional, whether it is IRP or RP. In my experience, I have not gone ahead with the process of appointing the valuers until I have the data, what is required for the valuers. So the data could be as Mr. Nataraj shared, the financials of the company. More so, it is the fixed asset register. I shall share and appreciate the work done by valuers. In one of the case, this was a case where I had to appoint new valuers, and when we shared the fixed assets register, they were able to say that two assets, one piece of land and another one windmill, they were never valued in the earlier occasion. And it so happened that they could identify, this was basically because some project items, inventory items, and valuation per se appear to be lower when I took charge. And when we finally, when the valuers did the final work, this newly appointed, the difference in the valuation was 27 crores. So almost 160, 170. So I have a lot of appreciation for the valuers who do very meticulous work like Mr. Nataraj shared. Coming to the point that whether RP is in a position to give all details. It is possible that some of the details we may not be able to share. For example, a valuer wants, if it is land and building, they seek including encumbrance certificates, which we normally arrange to do. But the plan of the building, the individual, the entire plan of the building, we have found difficulty in providing. So in such circumstances, we give whatever is available, and then we request saying that this is all what we have, and then we give it to them. One more thing I just want to add, what many RPs may be doing, and we also do, is that when we take the help of the auditors, where normally they certify saying that the fixed asset register we have verified and all. And in one of the recent cases, it was the auditor who gave the latest available fixed asset register. But we had to build it further, as Mr. Nataraja Nanjundia said, that we have to bring it up to the date. Then only a good valuation can happen. I hope I shared what the specific questions you asked.
Yes.
Or did I miss out anything?
Nothing, sir. As you said, okay, like we need to take care of that fixed asset register, which is going to be maintained by the company, or the resolution professional has to maintain. Or if it is not is there, then at least, okay, the valuer has to take some steps to maintain the fixed asset register or to find out the asset. Correct, sir. And my question is for Ravi Shankar Devarkonda, sir. Sir, now what are the precautions we need to take as a valuer? Because in few cases, even the resolution professional also is not going to be having the asset list. Then in some cases where we have seen practically the resolution professional says that, okay, I report to IBBI on you because you are not giving the report where I have appointed. Then what are the different precautions we need to take in such a cases where the resolution professional should not threaten valuer saying that I will report to IBBI? Then what are the backup we need to keep it as a valuer?
See, in a chess game, I'll tell you. Okay, it is more like a chess game because you are playing against others and all that. There is a standard proverb which says that offense is the best defense. Okay, offense is the best defense. So at day one, you're appointed, send a full list. Don't think shy of he may not have, he may have, that kind of thing. As an RV, send a full list, starting with memorandum and articles of association, whatever you want, minutes of the meetings, because minutes will tell you whether there is any additional purchase of assets or any sale of assets. Okay, so like that, send a full list. Okay, obviously RP will not have, because I am also an RP in several cases. We don't have most of them. So then, so for even as an RP also, when you're appointed, okay, this is not a forum for that. As an RP also, what we do on day one is that we send a full list to promoters to give the entire data. Similarly, RV also should give full list to the RP. RP will definitely come back saying that I don't have that, I have this much only. So to answer your question, if you have this kind of an approach, RP will never go against you, because he's already on defense, saying that he could not give entire information. So there's no way that he can complain against the RV in IBBA. So day one you start as an RV, give the full list to him. Then keep ticking one by one. At some point, the RP himself will come back and say that, okay, now I have got my Form G, I have got my expression of interest, I got my PRAs and all that. So he will say that, okay, now he feels the urgency for that this one. So at that stage, whatever data is available, okay, it's the best estimate. Supposing he doesn't, definitely he should give the balance sheet as an CIP commencement date. That is duty. Other than that, all other items he may give, he may not be able to give. Or suppose you say for receivables, as a SFA valuer, as a receivables unit aging, he may not be able to give, he may not be able to give. Then at least you can take the 3-4 balance sheets and see what is the numbers going on and all those kind of data. So best thing is that to avoid the complaint by these RPs against the RVs, first send a full list. Let him give the data over a period of, because appointment has to be done in time-bound manner by the RP. So what most of the RPs, every RP does is that within 37 days or within 47 days, whatever date is given in that, they will first engage these people. And for that also, RV, what he'll do is that he'll give a quotation based on the data that has been given to him, basic data that is given to him. If any additional information is given at some stage, suppose you say that I'll have to, as a land building valuer, I have to value the assets in Bangalore. Tomorrow, if he finds that there's some extra assets and all that, then he can discuss with the COC and get a higher fees also.
No, it means like, okay, like once you appointed as a valuer, and as precaution, first we need to send, okay, the documents which are required for do valuation, and we need to send keep on, like every week we have to send a reminder, then it will protect us. Okay, like in tomorrow
fact, I'll tell you in another case where one of our friends, only RP, has appointed me as a valuer. Yes. So, but his case immediately went to High Court for a stay. Yeah. So what I do, I have in my to-do list every month, first or second date, I'll send a mail to him. Please let me know what is, because you appointed me, please let me know what is the status, so that I can complete the valuation process as per the timelines given in IBC. I will have the standard sentence. I'll keep sending a reminder mail to him as a part of my follow-up. But anyway, he'll come back saying that he's still under High Court stay, so I can't do anything. So that keeps on going as long as it is there.
Got it. That's what, as a precaution, we need to send the mails and we need to keep the proper data. And okay, even there is a IBBA inspection comes or notice comes, then we will be in a position. And also the same way, like as we know that, okay, these are the challenges we have, like preparation of financials, and we don't get information, like how Natarajan said, we have to have the site visit, and we need to take into consideration before giving the quote, and even before we should know the company and the resolution professional. Sir, this is my like before going to process, like how you are going to do the valuation. My question to Ravindra Beleyur, sir. So the valuation report, once the report submitted by the valuer, to whom, like as per IP, what are the regulations to who, how you going to put before COC, or to whom you will give? Can you explain, sir, the new provisions into IPC?
See, now there is a number one, before going into the new provision, I make it a point to convince myself whether that valuation done by them is making sense. For example, in one of the cases, the total investment in the plant and machinery and other roads and other, it was a what you call hydroelectric project, a renewable energy project. So the total investment was something like 20 crores. The admitted claim is 30 crores, and the liquidation fair value was something like 3.5 crores, and the liquidation value is 2.5 crores. It was a big question for me, because how can it go down? I sought explanation from them.
Yeah.
Why it is so low? So of course they gave the reason, saying that this is inside a forest, 7.5 kilometers inside a project, and these equipments are all put there. Most of the equipments are put there. That is one set of equipments, and another set of equipments is there in the godown. So then the question is, if they already so much say about 10 crores is there, and the road is investment in road is about 6-7 crores or something, how you are valuing only this? They said that the road is already got spoiled. So then if the road is spoiled, then whatever is there inside the forest, if you have to bring, because this is liquidation value, that is
Yes.
to sell those items as piecemeal. So if you have to bring it and sell, we have to make roads, which would invest, for which investment is required is 10 crores. So, and so that is why we have valued only the realizable value of the what is available at the godown. Then I was not able to visualize in the normal course. Also, this was a COVID time. I would have visited this particular place inside the forest wherever possible. So then I made it a point before presenting to the COC. I made a visit, because by that time the restrictions were not there, and then walked inside the forest for 4.5 kilometers and realized that the road had really got spoiled in that stretch, and there is no way that unless the road is made, and these are all very huge items. So that is what I did. And the first thing is I convince myself. Then the second is, and also I want to share in it, this happens in land valuation. It so happens that the one valuer whom you have appointed, he values only based on the market guidance value, and the other valuer values including the recent transaction or something. I mean, we can't really say whether the assumption of one valuer or the other valuer is correct or wrong. So that is the methodology, and the assumptions are given. So these are also considered. Coming to the current recent provision, I think from February,
Yes, sir.
I have not followed this in the sense, because I have not done any got any valuation after this particular date. But what I understand theoretically is that we have to invite the valuers individually to represent them, and have a COC needs to have a discussion with each of the valuers. Each of the valuers, the way I understand, is in a separate session. I mean, it is the same meeting, but it would be separate. So that the COC is clear about the assumptions made in that valuation. My sense is the discussion need to be only on the methodology and the process they have followed, and COC has no right to question more or less on why they have valued more or less. This is my understanding. One more thing is that earlier, I noticed recently, I mean, earlier, if there is a valuation difference between two valuers, more than 25%, there were the RP could have recommended for appointment of the third valuer. Now, I think there is a modification in that regulation, not recently, but much earlier, is that it is the COC which has to take a decision regarding the appointment of the third valuer. I mean, this is all I can share related with their query.
Sir, since you mentioned that liquidation value and fair value, when you are presenting to the COC, or like the valuation has to be given by two people. For example, like as a SFA valuer, X has given like 10 crores and Y has given 12 crores. then when you are going to treat for your resolution professional, like what value you'll take, like you take 10 crores or 12 crores, or average like you take 11 crores for when you are approving the resolution plan, which is submitted by the resolution aspirant, your submitted resolution applicant.
No, I think it is the average value only. No? That is the
Average.
average value. So when we are sharing the fair value and the liquidation value, it is the average value. We may give in our communication after getting the non-disclosure agreement, both the valuers and the average value. So that is what we do.
Yes.
And
And
only when the specific COC member asks for the report, then we share the report.
yes, yes. And specifically when the company is going to take, like if the resolution applicant or the resolution has not come, then when the company is going to take the liquidation, okay, if some cases where resolution applicant will give very small value compared to the liquidation value, then the liquidation value is the very criteria to you, okay, to take the company into the liquidation or not. Because if we going to liquidate, we are going to get the more value, then instead of giving to the resolution applicant, and COC may take the, like for liquidation instead of the resolution. See, in this way, the fair value and the liquidation value is so much important for determining the company's as a successful company or liquidating company. My question is to Nataraja. Nataraja, like how you treat, like as a valuer, how you differentiate the fair value and the liquidation value? There is any criteria you take it? Because, for example, like when your trade receivables or investment, you may be having fair value, but how you determine the liquidation value as a valuer?
Sir, one is okay. Actually, when it comes to valuation under IBC, fair value, determination of fair value and liquidation value, differentiating between these two is a big challenge.
Yes.
Because what is fair value? Fair value is considering that if the company is in a going concern, then we are going to determine the fair value. Most of the times when we are doing the valuation of a CIRP company or a company which is into liquidation, they are not they are actually in a decline stage. They are not having any operations. So in case if they have operations, even a little bit of operations, I am happy to take some projections, some DCF valuation we will do with a higher discount. There is a valuation methodology for distressed asset valuation, where you are going to say that instead of, in case of terminal value, we will say that this company is going to exist until perpetuity. But in case of distressed company, you will say that year on year, this company is going to decline 10%, 20%. So next 10 years or next 5 years, if this company will decline, then your discount value will be what, 70% or 80%. So with that, you can have some fair value if there is operations. If there is no operations, I don't see any difference between fair value and liquidation value. Maybe only difference could be that liquidation value will be reduced by the expenses incurred to bring it to the saleable condition as per international valuation standards and IBC definition of liquidation value. So that could be the only difference. Otherwise, in the declining company, there will be no difference according to me, because mostly we will be doing the valuation based on the availability of the proofs. If we are talking about anything with respect to example, any rent deposit is there. If the rent is not paid for last 1 year, then we cannot say previous year's rent deposit balance consider right now, because
Correct.
1 year it is not paid. Then the landlord will deduct the whole amount, and if there is some 10,000, 20,000 rupees that he will give, or he will say, I will not give that also. So you have to get the confirmation for each and everything.
Correct. Yeah. Sir, my same question to Ravi Shankar Devarkonda also. Sir, like as a valuer, okay, it is as Natarajan said, okay, it's very challenging, okay, to differentiate the fair value and the liquidation value. Like, what is your experience? Like, how you determine the liquidation value? Will you deduct any 10%, 50% by standard? And we have seen few cases. We can even IBBI sent notices to the valuers. How did you determine that to 20% straight away you deducted and you have submitted the report? And what is your opinion on this, sir?
See, I'll especially for SFA is what I can talk very more this one, and others also will discuss. In SFA, there are two kinds of assets. One is basically your stock or receivables kind of things. Others are these duties, statutory duties. It's like in tax carry forward, in GST input credits and all that. Okay. Now, if it's a going concern, you'll give a value for this GST input credit, provided the returns are filed regularly. GST input credit and also the income tax carry forward losses. So in large companies or in any company, if there is a carry forward loss, it is the duty of the RP to ensure that filing of the returns regularly. Not that he's doing something great, this one, but to create the retain the value of these carry forward losses for the purpose. And if you see the Income Tax Act also, what it says is that normally if there is a change in management, carry forward losses will not be permitted. But under a CRP process, and where the Commissioner of Income Tax is given an opportunity of being heard, then you can get a benefit of the carry forward loss for the new RA. So that's the rule. So it is duty of the RP to protect these carry forward losses by filing regular in this one. Now that makes a huge difference between liquidation and this fair value in case of a normal, any company for that matter. All companies are last make companies, that's why they are here. But and this is regarding this statutory duties, because that definitely will make a difference. Then you come to the stock. So what I normally do in case of valuation, or when I expect a valuation report from somebody, what I do is that take the balance sheet, see all the assets, value one by one. So there are current assets. So then the duties, input credits, and all these things like that. You go one by one. Then you come to receivables. Receivables, if the company is able to give us a aging and analysis of why it is pending and all that, then you can go item by item, advance by advance. We'll do that. Suppose one advance is a 2-year-old, there's a genuine reason why he's holding it. So you give a fair value, liquidation value, same thing. But some other advance, okay, it is there, but is a corresponding, like what he said, Nanjundia said, no, that in the rent deposit is there, but rent is unpaid. So those kind of things, anyway, both fair value and liquidation value will give them 0 only. So you need to analyze asset by asset, including stock also. Stock, of course, we have to see whether physically go and see whether as per books. And then one more big advantage the current day RV has over the earlier RVs is that, and RP has is that earlier RP was not available, not getting this data from the banks. Now the rule provides, the IBC itself provides saying that the bank should give him all the information. That means when I'm doing when RE as an RP is getting the valuation report from me, he already has a valuation report from the bank regarding stock or fixed asset or whatever it is. So he has that additional information. So RP can always compare that with this. Of course, he can't share it with an RV for his benefit. So to answer your question, whether what is the difference between fair value, we to go by asset and where nothing else is available, and a fair value to this value will make a 25% discount if nothing else is available. So we go by all these methods. If nothing is there, then we go by this 25%. You're on mute. You're on mute. Subbarao, you're on mute.
Yeah, sorry. Yeah, yes, sir. As you said, okay, we have to take into consideration of, okay, the liquidation value in a very cautious, because sometimes even the resolution plan comes, even the NCLT takes, okay, like 2 years or 1.5 years in few cases, okay, for approving the resolution plan. Even once it goes to approve, sometimes, okay, even the NCLT, they reject also. Then again, company will go again by default into liquidation. Then we need to take a lot, okay, like think before finalizing this liquidation value. And also, as you said, like as a registered valuer, we have to see that asset by asset we have to value. Like now as a process, okay, like for example, like as a valuer, we have to do the valuation of assets only, and we need not to do any valuation of liabilities. especially in the case of IBC. Sir, Ravishankar sir, can you give how you do that value of investment value? Because in even corporate data, they invest in few private limited companies or public limited companies which are unlisted. If it's a listed, then we can take as per the market value at the stock exchange we can take. Especially when unlisted companies, how you value those assets? Sir, you are in mute, sir.
If it is an unlisted company, you should definitely get the balance sheet of the subsidiary or the other investee company and analyze it. Okay, that's a part of your duty. There is no exception to that. Suppose a CD, corporate data, which is under liquidation, has an investment in some other company. You should get the balance sheet of that company and do analysis of that. If the management able to give projections and all that, if it is that subsidiary at least is a what is called not a sick company in that sense, then you should do in the normal valuation methodology. You should follow that. If that is also a sick company, most of the times what happens is that if the holding companies subsidiaries also will be. I have seen several companies where holding company exceeds an RP. Subsidiary companies also enter insolvency. Those two people will be fighting with each other, claiming against the other person and other. So in that case, that's also insolvent company only. So you should get, but to the extent of valuation, if the subsidiary company is also sick company, then valuation of investment is anyway zero. Because clearly that's because these are last in the section 53. Whereas if there's a running company, you should get a valuation of that also. That's a part of the RV's duty. You should not think that instead of valuing one company, I'm valuing two companies. That's not the case. While giving quote only, you should think that, okay, there is I'm valuing not just one company, I'm valuing 3-4 companies. So that has to be done. In fact, I don't know how many of you have read this ICAI publication, ICAI publication for valuation during IBC under IBC. So, for some people
sir, there is a new ICAI publication on CIRP valuation, and also IIIPI has got one published one. I would say both are very good. I have gone through that very in detail. I probably I can put that in BVA group again. People would have already seen, but somebody has not seen. I will put both the things in BVA group, where IIIPI is very good and detailed.
Yes, like that, sir. As we discussed, like investment value. As a registered valuer, we have to value those investments which are unlisted company. Even we, as a valuer, we should not say it is a more work or burden. Then we have to treat. At least we need to ask information from the presentation profession.
It's not the benefit of fees, the additional benefit of fees. It is a punishment by IBBI. See, we go to God for two things. One is asking a favor, and second is not to punish me. So, not to punish. So from IBBI, so not get a punishment from IBBI, you should be careful about these things.
See, then now my question to Natarajan, like how you do trade receivables, because now we are going to be asset by asset as a valuer, because the company as a corporate debtor, even the company will be having used like 10 to 12 crores, and it is a major amount also. If you see the balance sheet size, sometimes like 30-40 crores is more than 50% will be in trade receivables. And it will be determined that the value of your fair value and liquidation. What are the precautions you take trade receivables, and what is the process you take it in valuation?
Yes, sir, sure. So I have seen in many of the few of the registered valuers adopting aging methodology for doing the trade receivables valuation. Somehow I am not convinced with that methodology, because if it is not paid for more than 6 months, 1 year, and especially if the company is into CIRP, the debtor is more hours to make any payment, because he knows that this company is going into shell. Why should I make any payment at all? So the possibility of getting anything from receivables is very, very rare chances. As I said earlier, if this company, sometimes what happens, company comes into CIRP just by chance, because somebody files operational creditor or a financial creditor files some application and it gets admitted. But that company is good. It is running successfully also. Like if I can take a name, Byju's is running successfully. If it is accepted, then we cannot value that company like any other liquidating company value. It has to be carefully valued to see that the way it is running the business. So, like if there is some operations also, then we can say, okay, if it is only 2 months old, 3 months old, then what I will check is if there is a goods received note, and we will also look for confirmation. So receiving confirmation is very rare, but if we receive confirmation, then we can value that receivables. Other thing is, out of the way, I am going and telling that if there is a possibility in the agreement with debtor, that is there any lien on the goods sent. If goods sent, if that's a kind of agreement is, sir, I am telling, if large kind of contracts, when you are doing large, not maybe consumable goods, you will not have that kind of contract. If you are selling some soap and all, you cannot go and take back that carton of soap. But if you are giving some machinery, there will be a chance that you can take back that machinery because you are not paid for this machinery. I do a lot of stock audit and credit audit. What we do is, if there is a credit purchases on the stock, that will be deducted because already it is unpaid stock. Unpaid stock, we will not give any loan amount. OD will not be granted. So that property is belonging to the person who has actually delivered. So if that can be proved, this is out of the way of RV actually. But as a professional, we can suggest, is that something is there, RP can exercise that rights.
Yes.
So these are the things we can do, sir. And there is one more thing which I will throw light on. There is a IFRS section and Ind AS section on expected credit loss. That also cannot be done for a liquidating company. But if there is some operations, expected credit loss method can be used, and IBC doesn't prescribe that, but we have very good supporting to say that this is the method I have used. So we have to try to use such kind of methods. Like we have to refer to IFRS and Ind AS to see that when we are substantiating our statement in the report, we will have weightage that IBC will not question how you did this actually.
Yes, that's what, as you said, okay, in few cases, even we have to educate the resolution professional if they don't know that how to value or how to get the information. And even I have seen in few cases where we have sit with both the resolution professional and directors of the company and going through one by one, like XYZ Private Limited, ABC Private Limited, it is there 1 crore, whether we will get it or not. Why we don't get it? Did you send the notice or not to them? Maybe as a valuer, it is better to note down all those, because we can leave like 10,000, 5,000 rupees, those trade receivables information.
No,
At least
Subbarao, another handicap that RP has, or a company under CRP has, is that suppose you have 1 crore or 2 crores outstanding from against somebody who is still about the ability to pay, but you can't file an IBC case on him.
No, correct. That is correct, sir. But
the Act itself prohibits us from filing an IBC case on for recovery of that kind of a thing. So
yes,
that is the problem.
But at least we can check with the resolution professional what actions he has taken those debtors, and like in Excel sheet, okay, even as a registered valuer, what we do, like you give us that breakup of all the trade receivables, and we will give that information, okay, recoverable or not. Let resolution professional himself give the information recoverable or not. If it is not recoverable, why it is not recoverable, and the aging, because which will help the registered valuer when we send information to them, or otherwise, because the same way IBB also given the notice. How did you, when there is 15 crores of trade receivables, you have given the zero valuation for trade receivable? How did you get? Why not some value? Even why not also is a difficult question. How much to give? Like 2 crores, 3 crores also we cannot give. Even as an insolvency professional, even till now, whatever we sent notices to the debtors did not collect a single rupee. That is very difficult. But as a valuer, we have to protect our skin for, okay, to even if IBBA notice gets, this is the homework we did, and we have not received any confirmation from the debtor or from the resolution professional, from the directors. When we don't receive any confirmation from them, how can we expect to get the amount? We are not able to get one mail from them, balance confirmation. We can't expect to get the amount also from them.
Subbarao, what also happens is that when you write a letter to the other company, the trade receivable person, saying
Yes.
that you are an NCLT appointed, you are a court officer, and these kind of wordings, out
Yes.
of 100 people, 1 or 2 fellows may pay also. So, so RP should not stop writing those kind of letters.
Yes.
One of them may pay also. That's okay.
Yeah.
But the problem is that the IBC itself puts a restrictions on the RP in initiating CRP against the other person, because section 11 or some section doesn't permit him to do that.
Yes.
Then I think for filing court cases also we have restrictions without NCLT approval, you can't do certain things and all. That's the problem.
Yes.
Just regarding that initiation of CIRP, I think there are NCLT cases where these kind of cases are initiated by RP. I do remember that originally that was the interpretation, but I do have seen, I mean, in the very early stage itself, that there are initiation of CIRPs, because RPs have the duty to protect, but the only issue is whether it is now the limit is 1 crore, whether your receivable, whether it is a corporate debtor, and whether it is a 1 crore. That could be a query, but I don't think there is per se restriction. There was a wrong interpretation which was corrected in some NCLT cases. I mean, this I'm talking about 4 or 5 years ago. I have never initiated any case like that. Just to add. Yeah.
No, 1 second. Shall I share my screen? I think I have it here.
Yeah,
No,
please.
but I know what you are referring.
This is section 11.
No, but it is not amended, right? It is there right from the 2016, right?
Right. So it is there.
So that is what I'm telling. There are NCLT cases where CIRPs have been initiated and the interpretation was different. I shall try to search and then share with the group, because I very well remember I'm talking about 5 years ago, but I have not initiated because there was no reason why I could initiate.
The problem is that the NCLT will simply say that this is for a recovery, not for revival of that corporate debtor, some logic.
Yeah.
Because as an RP, our duty is to recover. So it's more of a recovery proceedings. That's what NCLT may say also.
Correct.
I think Prashant Agrawal has something to say.
Correct. Yes, Prashant, you have any question?
Yeah. Hello, everyone. Good morning, everyone. I have a question of going for a liquidation value. There was this windmill project in one part of Maharashtra where I don't know how they made it, because there was no wind there, but they established the windmill, which is usually on a top of the hill where nobody can actually go. They made it the land as NA land. Everything was there. Now the IP said that now the land is NA. It is a project, but there is no wind, so there is no power generation basically. And now it has gone for a liquidation. I said that for any other person to get that land, it is not a going concern. So why should anybody take up a project there? So for me, it is simply a land which
Yes.
is not approachable for anybody. Not even the cow will go for grazing there. It is on so much of height. There is no water there. There is nothing there. So as per me, it doesn't have any value if somebody just buys the land. So how should we handle this?
May I respond to it?
Please.
Yes,
So
sir.
I,
Yes, sir.
I think I shared a similar case. I don't know whether you were there. The valuer valued the penstock and the other equipments which were inside a forest about 6-7 kilometers.
Yeah.
He valued at 0 because the roads which were made had got destroyed because of the flood, and unless the road is made again, which would again cost about 10-11 crores, the equipment could not be brought, and it was valued at 0. So I shared that I walked 3-4 kilometers to convince myself that it is impossible. So similarly, in your case, I think Mr. Nataraja Nanjundia shared that it is the value what you could realize in case you bring it down and then sell. So as a scrap or whatever it is, because I mean that is what it should be. So since you are a valuer, I think it is your judgment regarding the valuation whether it should be zero. It is zero if the cost of bringing down is more than the scrap value which you may get. I mean that
No,
is
sir, I'm
how I
talking of
would put
land,
it.
land and building only. Land part only. I'm a land and building valuer, not a plant
Okay,
and machinery.
okay, land and building. I'm sorry,
Yes.
I'm sorry
Yeah.
if I missed.
So,
Land and value, will you value? I think if there is no, I mean, in my as an RP, I'm not land and building value expert. I think I refrain from commenting. Yeah.
no,
Sorry
not
for
a,
wrong
no,
understanding. Yeah.
no, sir.
Sir, same logic applies for land and building valuer also. The valuation standard and also IBC definition of liquidation value remains same. The cost realizable value is nothing but a realizable value minus the cost incurred to bring it to the saleable condition. So
Sir,
actual
here,
net, it is called net realizable value. So if
sir,
the value is very good, but if you are not able to bring it to realizable condition, then that should be assessed appropriately by land and building valuer also. Maybe in that case, if there is a expertise required from SFA valuer, so it is, I think it is okay for L&B valuer to give technical expertise. SFA valuer can give their professional technical expertise. Both together can arrive at the value.
so the problem here was that this was not actually functional also, because there was no wind there in that particular area. These people had actually managed the bank and everybody and had established a power generating thing on the paper. And they said, "Ki, sir, it is any land, it is this, so many things." It is not, see, normally you see all those windmills, wind power mills are on the top of the hills. You know, there was no approach road also. So anybody will not be able to buy that because there was no wind generation also. So even people who are into wind generation business will not take over that. So there is no question of, realizable value.
Yes.
So that
Yes.
can be certified, sir. You are the expert. If
No,
you
no,
are
sir.
able to justify that, and maybe if you can certify that, that is good enough actually.
Certified, you can give the zero value because
Yes.
at the end of the day, the resolution professional or liquidator again has to sell, because if you give some 2
Yes.
crores, 3 crores of value, again the liquidator is not in a position to sell it, and again he has to put like
Absolutely.
auction again
I
going
think,
again many
Subbarao,
times.
I think,
Yes.
see, the land definitely will have a value. Okay, it may not be useful for a windmill in this particular case.
Correct.
Okay, I'm sure there are many projects, like suppose today we have in Bangalore only. Okay, I'm talking about Bangalore city because most of us are here. We have large projects like HMT, ITI, and all that. We have vast tracts of land. Okay, but those projects are unviable now in the current technology state. Similarly, in your case also, you have land, but the machinery is crap. Okay, if the land can be used for any other purpose, but you said that it is not even for grazing also, it is not there, but I'm sure it will have some utility,
Sir, it is
or
on the
at least
top of
some
the
circle
hill.
value then, because
It is on the top of
many
the
other
hill.
cases, what we are also doing is that, what
Yeah.
also happening is that, suppose there is some factory shed doing X business. Now that business is down because of various reasons, or competition, or technology, whatever it is. So same should be used for something else. So
Yes.
similar logic, if this land is not used for power plant windmill, it may be useful for something else. I can't perceive kind of a thing, but some Lonavala kind of a thing. Okay, but that
Sir,
will be
maybe
different.
offline we'll discuss this point, sir, because we have
Yeah.
other points to discuss
Yes,
in
yes, yes,
SFA.
yes,
Yeah,
yes,
it's
yes.
okay. And
Thank you,
now
sir.
coming,
Thank you.
yeah, thank you, sir. And coming to the major, like in the asset values, okay, we see a lot of like loans and advances given to relatives and the directors. My question to Natarajan, like how you value, because okay, after trade receivables, the highest value in the balance sheet is there like 5 crores, 10 crores, 20 crores, and it is the like intercompany loans, then relatives. How you value those assets?
Sir, I will look at it from being an RP. My perspective will come both as an RP and RV, because I can't look at it only from RV perspective. First of all, if loan and advances given to relative, I will have a suspicion there. Why loan and advances is given to relative? What is the consideration? Agreement is there. Without that, how you give loan and advance? Obviously, I am wearing the RV hat. I will ask these questions. And again, same route, sir. Balance confirmation should be available. I will check the audited financials of previous years. Auditor is required to take balance confirmation. Nowadays, I see that, sorry to talk about CAs, even they have their own difficulties, that if balance confirmation is not obtained by the corporate debtor, they cannot do anything. But there is, I don't remember the provisions exactly, what section and all. CA is supposed to get the balance confirmation. So I will look for previous audited financials, whether balance confirmation is obtained. Also obtain fresh balance and confirmation. One more thing I will see is there any a liability side entry for the same asset side entry for the same person? So set off, is it possible? Or sometimes what happens, there will be uh, uh, connecting transaction. Some land is there, something this person has to give and so that person has to receive. RP and even corporate debtor is confused. Maybe sometimes we have to suggest this is a transaction you have, you do the proper set off. Then that will come down to whatever the actual amount to be payable. So all these investigations have to be done, sir. There is no thumb rule. So this is what I would do. I would always use my accounting experience and operational experience while doing this. That is why when appointing IBBI has told 10 years experience. Sorry, are we only 3 years? But we have to bring in our experience. That is what I would say. Sir, you are on
You are
mute.
on mute.
Yes, you mean that, okay, like the party wise, we need to discuss with the corporate debtor and the resolution professional, and we
Yes,
should
sir.
know the status. Okay, even we need to compare the liabilities. Then if any liabilities there, obviously we don't get the amount. Okay, party wise, we need to discuss on that.
Correct,
It's
sir.
the
That is why, from the RP's hat perspective, I would
Yeah.
look at it this from a PUFE transaction perspective. So there is a possibility of PUFE, though that is not a scope of RV to suggest anything, but RP should decide that there is a possibility of PUFE in this. As a transaction auditor, I would really look at it from that lens.
Yes, yes, yes. Yeah, sir, my next question to Ravishankar, sir. Sir, apart from this loans and advances, the major part of balance sheet again contains like advances to statutory authorities like BESCOM, the water board, or sometimes rent, even prepaid expenditure. How you value? Because they're all expenditure paid by the company, but can we realizable like how you value this type of assets, sir?
See, what happens is that in case of a BESCOM and BWSP deposit and all that, if the company is in arrears for the regular monthly bills, okay, I had given a deposit say 10 years back when I started the company. But if I'm regularly paying my these things in a fair value, you will get a valuation for that. But if the company is not able to pay those things on a monthly basis, on a regular basis, definitely those statutory authorities, even though even though IBC says of talks of section 14 of moratorium and all, still they'll anyway adjust it.
Yeah.
Okay. So in case of liquidation value, it will be 0. But
Yes,
if it is
yes.
a fair value, definitely these things will have a value, because as a going concern, I'll still have those. If when a plan is approved, then there'll be a moratorium on the old things. So as per law, the RA has there's an applicant has a right to ask for waiver of those old dues and only continue with the deposit. In case of fair value, we'll definitely take it. But if it goes to liquidation, then those departments have a right to set off anyway. Same thing with prepaid expenses. What happens is that you pay prepaid salary or prepaid water expenses. In case of liquidation value, I'll give them 0 value, because obviously, see what happens in many of the cases, what I have also seen is that if the company gives an advance to X, but while collecting it, the promoter will collect it from a different group company. So 90% or at least 50-60% of these advances, when I spoke to those people, this was the response I got from them, saying that okay, even if he has given for project, steel is supplied for project A, but steel was actually used by project B. So in this maze of transactions, no, most of these advances are difficult to get, especially the prepaid and these things.
Yeah. So in the same way, like even provident fund and gratuity, okay, in the new act, okay, the gratuity fund has to be maintained. Then as a valuer, you do valuation of a gratuity and the provident fund amount as a realizable value.
No, that the IBC itself is quite clear, saying that those do not form part of the assets of the company. So definitely,
Yes.
if the company is still a going concern, that will be there. But
Yes.
RJ will not be able to draw it for any other purpose. No? So same liquidation
Okay.
value definitely zero. But as a going concern, at least to the extent of liabilities, this will be helpful.
And anyhow, the other asset, we have the bank balance and cash in hand. Whatever the bank balance, we take the bank statement and we give the
That
both
goes
liquidation value, fair value same.
cash
And
also, I'll go and on the day of valuation, I'll go and cash counting.
yes,
Then
yes.
I'll do a back working of the.
Yeah. Now, till now, what we have seen the process and the challenges. Now, my question to Natarajan, like, what are the precautions we need to take as a registered valuer when you are preparing a report? And before that, I can ask. Okay, I had to ask one question to Beleyur sir. Sir, like for preparing the report by Natarajan, like, will you give any management representation letter if we, as a valuer, request? Will you give in a position the MRL to us?
Normally, the valuers I have appointed, they insist on the management representation more so regarding all the kind of the assets, financial assets you shared,
Yeah.
receivables from debtors, loans and advances, the government deposits and all. And we do make sure that the whatever it depends on whether there is any probability of recovery. So wherever we think that recovery is not possible, we very clearly mention what is the amount. From most of these receivables, if the company has not been running, it would be at zero. But where the companies are running, there would be a good possibility of receivable. For example, in a hospital, if there are insurance claims made, it would be coming. So such what is the recent, at least my practice has been, if it is a receivable which is shown as receivable for the last 3-4 months in case of insurance claims and all those things would be certified whatever is recoverable. And this exercise for RP to decide on whether it is recoverable or not recoverable, whether the value of inventory shown as per books is has any value or no value, it is a good opportunity for RP also to decide on whether there has been a negligence of the promoter directors and the management to file section 66 petition. So it is RP has a duty to arrive at a value whatever he considers as appropriate, and it must be very hard for RVs unless such representation is given. It would be very hard for the valuers also to take a call regarding what could be the value. That is how I would put it. I just want to add one more thing connected with your earlier question. That is, there is a requirement for RP and COC to disclose fair value, and COC has to give reasons if the fair value need not be disclosed in the information memorandum. So that is one point I missed out when you said that what are the latest changes connected with the valuation. That's what I wanted to share it.
Sir, as a IP, did you give any MRL, sir, to the registered valuers when they requested? Like,
what is MRL?
Management representation letter.
The management represent. Invariably the valuers I have appointed have insisted on the manager representation letter, and I don't have hesitation to give management representation letters because the professionals, whether as company secretaries or chartered accountant or when you are, I mean, I have also valued growing concerns. So even in that case, I have I mean, I have valued basically on enterprise value, not connected with IBC as such.
Yeah.
So I have insisted on specific management representation, because you can't, without their confirmed assumptions, valuer is nobody to decide on himself, make an assumption about what the company's perspective is about the realization of the value. So
Correct.
I have given in each and every case, and it is an absolute requirement and duty of the RP to give the management representation letter.
Yes. Yes. Yeah, as a valuer, okay, better to take always MRL. Even sometimes they hesitate to give insolvency professional, but in few cases they will give. Better to ask. And my question to Nataraja, like, what are the precautions we need to take when you are preparing, especially valuation report under IBC?
Yes, sir, sure. So, little bit, let me talk about the management representation. So, in case of IBC valuations, in few cases, I have received management representation. I would say in many cases, management representation is not received. They are not giving, RPs are not giving. So wherever, and also when I talk about all my enterprise non-IBC valuations without MRL, I will not issue the report. So that is for sure. So I am receiving the MRL in all non-IBC cases. So in all the cases wherever I am handling the assignments, I ensure all mail communications. So even there is anything which we are talking on the phone, the same thing is documented on email. That is something I have learned in all my corporate career, and without mail communication and mail confirmation, nothing will be, without documentation, we will not go ahead. So that way I ensure that all the documentation for all the conversations is available, and the gist of that is there in my evaluation report under assumptions and discussions and conversation. I will ensure that it is part of my valuation report, so that even if IBBI is taking my case for inspection or something, then they will be able to see how I arrived at this particular value and what is the conversation, everything. Obviously, the mail conversations will be with me. If it is asked by IBBI, we will be able to produce that. So that is the level of documentation I will do. And obviously, if there is any caveats and limitations, we will mention that I follow the standard caveats and limitations given by IBBI in 2020. That is given for enterprise valuation and IBC. Both together I follow, making some small modifications.
No, that means will you put all in your report, okay? Like even the site visit, whatever you have, even photos, whatever you have taken, will you include in your report, Nataraja?
Yes, sir. Photos can be attached. Maybe not all photos, because that will be very big size. I will attach one or two photos we can put, and we can say that this is the date visited, and this is what the photographs.
Yeah, and even some cases, okay, even just it is not defining the methodologies, and after defining methodologies, and we need to explain, we need to give information why we have not taken those methodologies. Otherwise, if any inspection goes, they will question that. Okay, and before concluding, can I request any questions from the audience, especially on SFA evaluation, anything?
Subbarao, I have two questions, sir.
Sir.
Sir, question number one, this inventory is debatable when we are doing the SFA valuation for a CRP case. The inventory, whether SFA valuation should do, plant and machinery valuation to do, what is the view? Question number one. Yes, sir.
So now I request Ravi Shankar sir to deliberate on inventory valuation, especially. The question is whether it is SFA value or plant.
Sir, two things. Okay. First, if the SFA is purely technical in nature, the concerned technical person only should be the inventory valuer. That is clear. Okay. There is an IB, as I said, there is ICA, IPA, IIP guideline is there, which clearly says that if you are a real estate, suppose you are a real estate valuer, okay, then the inventory in this real estate should be done by the land and building person only. That is clearly in this IIPA this one guidance note. Okay. Rather than that, normal inventory will be there. If you go to a normal factory, you will find so many racks and all that. as a stock audit, what you do as a chartered accountant or whatever it is. So those kind of things can be done by the SFA valuers. Then that's
Sir, but
point
if
number
you
one.
see that sir, the supposer is if you see that we are doing a securities and financial asset,
Right.
this inventory, as you know, inventory definitely is not part of our financial asset. So there are many people have doubts saying that it is not part of our.
No, so
We
what
are not
so what RP should do is that while giving the engagement only, he should say that your SFA valuer, you are seeing 1, 2, 3 items of the balance sheet. So in that case, suppose the inventory mainly in a real estate company, the main inventory is land and building only. So he should assign that to L&B valuer only. So while RP, while giving the assignment, suppose you are taking IPG, the RVG for that matter, if you are taking a resolution valuation entity, then it is not a problem. You need not make that kind of a distinction because you are giving the engagement only to the entity. Entity is supposed to have all 3 values and they are supposed to distribute among themselves the way they want. That's a different issue. But if you are giving to individual valuers, this in the case of a real estate company, it should be to this one. Plus one more advantage now, as I said at the beginning also, one of the advantages that RPs have nowadays is that they have to get the data from the banks or the creditors who are all there. No? They should share that information with the valuation reports with them. So whatever your valuation report should match at least reconcile with that. Okay, I don't say match, it should reconcile with that.
Yes, sorry, as Chandrasekhar, as Ravishankar sir said, okay, like we need to understand before taking the engagement, okay, the valuation, who will do it. Even, okay, I have a practical example, like where we have done one valuation. The company is having huge plant and machinery in the 5 warehouses. And again, they have that, again, inventory of like bolts, nuts, it is there, okay, like unusable material. And even the inventory, they said, okay, you do as SFA valuation, we do only the plant and machinery, which is fixed to the land or to the walls only, they said. Okay, it is all again depending upon the resolution professional where you go, okay, discussing before taking the engagement. And even we have some livestock will be there. For example, like some companies will be having the sheep, like horses and all. Even that cases also as SFA we have to do, because plant and machinery value will say that it is not my duty, and land and building will say, and it will come to the SFA. We need to understand before taking the engagement. Yeah, sir, Ankit, I think some question. Sir, before going to Ravindra sir, okay, Ankit, do you have any question?
Thank you very much, sir, for providing me the opportunity to ask the question. Since being a registered valuer, I have some one basic question which I encountered during my latest assignment actually, and on which I need the insight from the IP especially. See what has happened. I was appointed as a liquidator valuer during the liquidation stage. CRP level is already is over since last 2 years. So I was appointed as a SFA valuer at a liquidation stage. So so far so good. I know as per the regulation 35.2, 35.3 of IBBI liquidation process regulation, the basic purpose of appointing the registered valuer during the liquidation stage is to determine the estimates of realizable value of assets and liability, right? So accordingly, I took an approach, being a SFA valuer, I took an approach that I had to determine the liquidation value, right? And that is what the basic premises of the liquidation, stage liquidation. But as a part of the recent amendment, when I attended the COC meeting, or currently it is being called as a SAC meeting, right? So their approach is that you just give us also the fair value also, right? Because other 5 values are also giving a fair value. So why don't you give us a fair value? I deliberated with all the learned person, and I try to convince them that whatever you're saying is not seems to be proper to me, because we are in a liquidation state. Had it been a case like you are going to resolve it, it has been already resolved at the CRP level, right? Now we're in liquidation. So what exactly my objective is only to give you a liquidation value. The another thing is why we went to deliberation is that because being a SFA valuer, I analyze what are the assets available, and the only asset which is available, which is comprising significant value, is a GST credit, right? So my stand was that there is a lot of GST credits is there, but since we are in liquidation state, there is no formal mechanism available under the present GST rules regulation that you could go and liquidate this value, right? So I'm constrained to give a zero value. This is what the deliberation I made to the COC or SSC meeting. But I think their approach was that was still we know that what you're saying is right, but still you just give me the fair value also.
Yeah, Ankit, we understand your question. Okay, I think Ravindra Beleyur will answer your question. Okay, why the liquidator valuer has to give both values, fair value and the liquidation
This
value?
is what I need to understand my need to get some clarity whether my approach was right or not, because so that I can be more prepared in my next assignment. That's what.
Okay, I mean, I'm not sure whether I would respond to Mr. Ankit's query, but if I am the liquidator, in the normal circumstances, I would expect only the realizable value and not the fair value. But if it is in an extreme circumstances that it can be sold as a going concern, yes, and there is some section 230 compromise arrangement is possible. That is the situation in which it may be required. But in the normal circumstances of selling in piecemeal or just the assets, it is not required. I just want to share one small personal experience connected with the Mr. Chandrasekhar's query. I have done the inventory physical verification and the valuation by an expert before taking the full custody of the custody and control of the company in a special circumstances, because the value of, as per the latest books of accounts of inventory, was showing something like 25-30 crores. When I visited the plant, I did not have a sense that it could be that kind of value being there. Taking custody and control is a big responsibility. So I appointed a valuer who can this was a steel and iron and steel connected items, most of them. And it is very difficult for, it is not like verifying stock holding units. These are huge, very huge. Then I made it a point to appoint a valuer, technical valuer, who was capable of measuring the lot based on the measurements and identify the specific kind of steel and give a valuation, so that it gave a lot of comfort to me to take custody, because it is very, very crucial for RPs to be sure of the value when they take control and custody, including physical verification. This is one point I wanted to respond to Mr. Chandrasekhar.
Yeah, Ankit, for your question, okay, as you said, okay, the liquidator is requesting both fair value and liquidation value. Yes, even in IBC, it is not saying that, okay, if the company is under liquidation, you have to give only the liquidation value. You are supposed to give both values, because the liquidator also has to try to sell the company as a going concern basis, like how the resolution professional. That's what, even in the auction, they will give the first as a going concern full company. And if the first auction is not going to be successful, then they will again go to like piecemeal basis, like land and building, then plant and machinery, other assets they'll sell. For your question, yes, you have to give the fair value and liquidation value. Both values you have to give to the liquidator.
Thank you, sir. Thank you so much.
Sorry, any other question?
No, 1 second. No, Mr. Ankit, I have one more thing to you. Some COCs will ask you, what do you call creditor wise, because if you see this liquidation regulation, it says piecemeal sale, going concern sale, some for 5 methods are there in that, right? So there are, I have seen RPs or RVs doing this, who say that give me each headwise how much. Suppose I do slump sale, what is the value? If I do something else, what is the value? That also they have a right to ask. If they ask, you have to give.
No, sir, I accorded the request, but my point of view, my challenge was that the only asset is on a GST credit is there, right? And for that, I have a lot of
If somebody buys the company with going concern, he will get the credit again, no? So it's not that.
I accorded the request, but I just want to understand the logic with regard to the regulation we have in place, basically, and looking to the vis-a-vis my situation, which I have assignment. That's why.
And even regulation is not saying anywhere in the companies under liquidation, only liquidation value has to be given. As a valuer, even with the CRP under liquidation, we have to give the both values, fair value and liquidation value. Maybe the same also, maybe sometimes we have to give. Yes.
Okay, regarding GST, I have a very small point. It may be in exceptional circumstances, there could be balance in cash ledger. So if there is something in the cash ledger, you have right to get the money. And in most of the cases, it may not be there. But in my cases, there were some small amounts which in liquidation, we have got back the money. And if you make a claim, GST promptly gives back if there is a cash balance available in the cash ledger.
Correct,
Just
but
a
in our
small
case,
point.
it is not a cash balance, it's a credit balance. It is across the 6 GST number. That's what my challenge, and that is the reason I have deliberated with the COC.
Yes.
Thank you, sir.
As a time proximity, okay. Now I request the panelist, okay, to give just 1 minute the conclusion as a starting with Ravindra Beleyur, sir, okay, how the IP has to support the valuer. Just you can conclude 1 minute, sir.
Okay, I mean, in my view, RP, when we are taking the services of RPs, we have to necessarily provide them with all the support. I think I went to the extent of saying it is in 2 or 3 assignments, I have not appointed valuers until I have the data what is required for the valuer is there, in spite of the regulation 47 days and all that, whatever Mr. Ravishankar Devarkonda shared. I have not appointed the valuer until I have the data on my hand. So in my view, it is the duty of the RP and there is no excuse. And one more thing is possibly some shared very bad experience valuers. Maybe if valuers have come across otherwise also, it is good that when they put their engagement letter or their proposal, they are very clearly mentioning that what is the responsibility of RP, what is the responsibility of valuers in clear terms in their technical and commercial proposal. And in case the RPs don't give, the best way is like Mr. Nataraja Nanjundia said, instead of listening any, it is rare. I think it must be a rare experience for valuers complaint to IBBI and all. On the other hand, RP should tell that in case you don't give this information, we are not in a position to execute that assignment and we resign. That could be the best way instead of facing too much difficulty from any RPs. I don't think many RPs do that, but I'm telling in a worst scenario, this must be the action which valuers should take. RPs should definitely support in each and every way, including management representation letter, which is their absolute duty. That is how I would put it.
Yeah.
Thank you for
Yes, sir.
this opportunity.
We need IPs like you, sir. Okay, only when is the requirement, okay, to appoint valuers, then even we need not to wait, okay, sending mails and keeping, okay, all the assets, all this one. And I request Ravishankar sir also to give the final conclusion.
See, if a valuer, I'm talking of valuers who are not into this IP thing also. What I suggest is that if you are doing a valuation for income tax purpose, please read Income Tax Act also. If you are doing for FEMA purpose, please read FEMA also. Similarly, if you are doing an IBC valuation, please read and understand the provisions of IBC. Otherwise, at least check with somebody. What is your liability? What is your timeline in which you should give your valuation report? What are your rights? What is the duties of RP to give you data? This kind of things. Then only get into this. Otherwise, no, this is a very complicated subject because valuation itself is an opinion. Giving an opinion and based on insufficient data is further complicating the whole thing. So please go through the IBC also, then only get into this IBC valuation things. That's what I can suggest.
Yes, sir. I request Nataraja to give final remarks, sir.
Yes, sir. I would second Ravishankar's thoughts, especially, and I would like to add. So the people who are RV and IP, invariably they will have exposure to IBC to a greater extent if they have handled cases. Otherwise, it will be little difficult because they can't just go by whatever learnings they have from other valuations like enterprise valuation or FEMA valuation. There are regularly new case laws which is coming out, and there are regular notifications from IBC. So maybe they should take professional help of colleagues. or they have to read these case laws. Recently, I was reading one case law also where the NCLT can approve the resolution plan below liquidation value also. I am yet to go through that case law completely, but because there is no such thing in IBC guidelines that it cannot be below liquidation value, and it is COC's commercial wisdom to approve. So what are those circumstances? There are some 2-3 case laws. I am yet to go through that. So these kind of knowledge is something we have to gain so that we are in a better position. Otherwise, we might make mistakes.
Yeah. By listening all this, my final conclusion is like, okay, when you, as a valuer, when you are going to take any valuation report or valuation assignment, okay, we need to check who is the first RP, resolution professional, whether he is in a position to give support or not. Because even the RP also, the resolution professional also might have entered recently, like maybe 1 month, 2 months before you. Is also a professional, and also the corporate debtor we have to see. And as Chandrasekhar also pointed out, that inventory we have to go through the balance sheet, all those things, and again the investments, if anything is there, and we have to do some background. Okay, because once you take the assignment, again we have to do 100% without compromising our standards or values, or even whatever the IBBA standards we have to follow. And we cannot say that they have not provided this money or transport or other out-of-pocket expenditure. We have to clear, because tomorrow we will be in a position again we have to travel to Delhi instead of traveling to other place. To avoid all those things, we need to take care, especially in the IBC valuation. With this, we will conclude, and over to Shilpa.
Before I'm concluding, I was just wondering if any of the participants have any other question. One last question, before we wind up the session. Any questions?
Yes, Prashant sir.
Yeah, I just wanted to know that there is a land, say supposing it is 1 acre and it has a value of say around 100 crores. Now, one company has 1/5 of the holding in that. Okay, that company is having 1/5 of the holding. Now, this is gone for a CRP, and that person is asking me for the valuation. I said that as a tangible asset, I need the boundary wall of that. Otherwise, I cannot say whether it is in the front side or the back side or the other side. Is it approachable? What shape it is? How can I value? But as on paper, it is showing 20 CR because 1/5 of. So, is it a tangible asset or an intangible asset?
Sir, I request Ravindra to answer, because with his experience in valuing these big plants.
See, it is like a apartment. Suppose I stay in an apartment. We have a 500 apartments in say 5 acres. So I have 500 square yards of UDS, what they call undivided share. Okay, but frankly speaking, no, I don't have this is a land and building, but definitely here's an undivided share. So undivided share valuation can be done, has to be done, because when somebody buys my apartment, it along with my apartment, that whatever square feet I have in the apartment, the undivided share also will go to him. So in this case
the
also,
apartment is defined because it has an entrance, it has a living room, it has a bedroom.
No, what I'm saying is that apart from my apartment, which is say 1500 square feet, you have an undivided share in the ground also, land also.
Absolutely.
So that land is not I don't have boundary for that land. But whoever buys my apartment, he also gets an undivided share in the whole land. So
no,
I think,
sir, here it is a vacant plot only, and the company is having 1/5 part of it.
Right. So he's a co-owner. He's a co-owner with the other people.
Yeah. So now, how do I define that? Where is this plot? Is it on the backside? Is it locked? It has an approach road? What is the shape of the plot? Of 1/5 part it is. How can I value that?
Correct. Prashant, see, that's what, okay, as a land and building valuer, okay, you have to determine the fair market value or liquidate value for this. Even, okay, I have seen one case, okay, like there is a property in a prime location. Because of that property square feet is 20,000 rupees. Because of Vastu, nobody is buying for last 10 years. Whoever buys that land, okay, the next day the owner will die or something.
Yes.
Okay, it's a vacant land only, because we can't give value for the type, okay, even zero value, because even you value.
Subbarao, I think the answer I can suggest for him is that you value the whole 1 acre.
Yeah.
Okay, 1/5 of it. Then you have to give some discount for it, because he will not get that full value unless other people also sell along with him.
Yeah.
Something like that we should build into that.
You enter into the purchaser role and you have to think and we have to give the value. That is the assumptions we
So
take.
I'll get a value. See, purchaser will get a value only when other 4 people are also selling along with him.
Yes. The discount you can give, as Ravi Shankar said.
Right.
Yes,
So that normally you see in the shareholders agreement, no, that drag along or tag along rights. So that kind of a thing you should think of something like that.
yes.
I think I think if there is
Yeah.
if there is such a situation, normally the agreement would have provided what would be the exit clause and all. No? I mean,
No, it was not like
I
that.
am presuming that if it is kind of a joy, if it is
It's a co-ownership. This is.
this is the I endorse Mr. Ravi Shankar's view.
Yeah,
Yes,
we have. I just have one question for the panelists. Suppose the company is into problems because of mismanagement, okay, and the company has gone into CIRP, okay. As a valuer, okay, I see there is a brand, okay, I see some assets other than balance sheet, okay. As a valuer, how do I consider it? I can see some problems, mismanagement, or there is a change of, or the key manager person is expired or not available, or there is some fight between the brothers, whatever reason. But there is a potential in the business, there is a brand, there is some intangible asset in the company. But in a simple normal IBC valuation till now, whatever we have discussed, fair value, realizable value, and the starting point is the balance sheet normally. But as a valuer, can I take that intangible asset? Can I consider it? How do I consider it? Any thoughts on this?
Shilpa, for that, okay, you can consider that one because you enter into the shoes of the resolution applicant or the purchaser. If I'm going to get some value about that brand or this one, definitely you have to value it. Otherwise, tomorrow the COC only will question you why you have not valued when that is having brand. That is, we have definitely have to value those things.
Any other intangible for that matter?
I would like to add something. In case of brand valuation, in case of IBC, we have to obviously do the brand valuation. But unlike going concern brand valuation, there will be little aggressive. But in IBC case, maybe it can be discounted a little bit. There are various methods, which is MPEM method, multi-period excess earning methods, and also cost to recreate. So maybe cost method can be taken, which is the floor value. Because you don't know whether the resolution applicant who is coming in will be able to sustain the business the way this promoter has sustained, because brand is a combination of promoter's ability plus the brand already created. If the other person doesn't carry forward that legacy, that will be the question. So what is spent on that brand should be taken, and discounted royalties can be taken. So very detailed valuation has to be done in a different way.
Sir, I have
cases. Actually, you're seeing many cases nowadays like this. You're seeing Byju's, Coffee Day. You're seeing so many companies in this line.
sir, I have one point in this case. Hello.
Go ahead, sir. Go ahead, sir. We can hear you.
Sir, in the CRP cases, what we do evaluation is individual assets, receivable, loans, advances, cash and bank balances. Sir. There, I doubt we'll consider anything other than intangibles or synergy. We'll give only individual asset value as a liquidation value or fair value. Yeah, Shilpa saying if she wants to give that, definitely there is a brand. We have to give one more report. Then as a liquid, what is the fair value for the entity? There we calculate as a underlying asset is a securities or business valuation. When I give the liquidation value, yes, sir.
Yeah,
I think that's
sorry.
what.
Yeah, sorry. See, this particular aspect of brand value, I am not sure whether fair value and liquidation value can take, because these are the value of the assets. When it comes to intangibles, I think it is on a case-to-case basis. If the RP and the COC see that the enterprise value, there is an enterprise value which considers which not only considers the brand value, So if they think that there is a sense in going for an enterprise value, then that enterprise value could reflect the brand value. But I am not sure the cases we have seen, we have not come across that. But in future, for example, somebody told about Byju's. It is quite possible that that kind of a value is there. But I can tell you my own experience connected with this. The resolution plan applicants, they see this intangible and they build their value into this. Because I can give an example. There was a chemical company where the liquidation value was hardly 85 crores. Fair value was, I think, 100 plus crores. But the acquirer gave it a value of 115 crores. So similarly, a hospital, the what you call the liquidation value as 56 crores. These are all real figures I'm talking about, which are available in the resolution, plan approvals. The liquidation value was 55 or 56 crores, and the resolution applicant gave a value of 85 crores, which is 2 crores more than the fair value. So in my view, the liquidation value is for a limited purpose, and it is not really the basis for approval of the resolution plan as such. It depends on the market, and if the market sees value in it, why not? It can be done. But if COC and RP are very clearly thinking there is an intangible value, the better way is to go for enterprise value rather or a brand valuation. Brand valuation is what? Brand valuation is nothing but based on the discounted cash flow of the future. If this brand is there, the value is Y. If it is without brand, value is S, Y minus X. So the better perspective could be to go for the enterprise value or arrive at the brand value, whatever you think prefer. It will be a very contextual basis, I would put.
And also, it is not part of the only SFA valuation. If there is brand valuation, it is an additional assignment. So just like that with SFA valuation, it cannot be done. And brand, to Chandrasekhar's question, brand valuation, there are two scenarios. One, it is reflecting already in the balance sheet. Another, it is not reflecting. So both the cases should be, if it is not reflecting, then RP should initiate. We can't just give if it is not reflecting.
One small point, Mr. Nataraj, the point is that when the company is in a bad status, the value, whatever even reflected in the balance sheet,
yeah, that also
it may mean as if it is not
yes,
value.
I am not saying we can take at book value, sir, but even to value that, it should be available. If it is not available, we can't say that we will do brand valuation. We can't do that.
Similarly, connected with the brand, and apart from the brand value, there are software development and all.
Yes,
so
yes.
that there also this issue may come up, but these are all complexities and which have to be done based on the contextual basis.
Yes. Subbarao, can we conclude today's session?
Yes, Shilpa.
Yeah. I thank all the panelists and the moderator for, readily accepting our request. We had a last minute request. There was a medical emergency for the speaker, which we had earlier identified. So thank you, panelists and moderator, for accepting our last minute request. On behalf of Bangalore Valuers Association, our admin will be in touch.
Thank you.
It is muted, I think.
But your voice is a problem.
Am I audible?
Now you're ready.
Yes.
Now it's that, yeah.
Yeah. I request Mr. Shiv Prasad to formally extend vote of thanks.
Good morning, all participants. It is a pleasure to have this very interesting and very challenging subject. And thanks, Shilpa, for organizing this webinar at a very short notice in view of the non-availability of the other speaker as usual. And luckily, we have got experts with rich knowledge in their respective fields. Mr. Ravindra Beleyur is an expert in insolvency profession, and those who are outside Bangalore may not be knowing about the speakers, but being from Bangalore, as the speakers are located, I know their capabilities and their worth. We are blessed with having such a pool of talent. Mr. Ravindra Beleyur, Mr. Ravi Devarkonda, and Mr. Nataraja Nanjundia. The webinar is well moderated by another expert, Mr. Kalva Subbarao, who is an insolvency professional as well as a registered valuer. And as a both qualified as a and a practitioner as a RP and RV, Mr. Subbarao has done a very wonderful job, wonderful duty to the role assigned to him. He has currently moderated the intricacies, and he has posed the right questions to clarify the doubts of all the participants. And my conclusion is finally, those people who are really doing IBC valuation are only left by now. Said now there are only 19 members, including the participants and panelists and participants. Probably leaving the participant panel member, probably only some 14 or 15 could be the valuers who are into IBC valuation. Nowadays, I observe and hear from most of our fraternity that they are not choosing this IBC valuation. And I've encountered so many experiences that IBC valuation is becoming very tough and challenging, and that is why many people are declining this role as a valuation for IBC purposes. Across the country, I am hearing such opinions, let it be from Bangalore, our own Bangalore, or in Hyderabad or Delhi, etc. So to mitigate the doubts, to clarify the doubts, and practically it is clarified by Mr. Ravindra Beleyur. He is a very good insolvency professional with very good analysis of the cases, and his rich experience in handling the IBC cases has explained as an RP. And the other two panelists, Mr. Ravi and Mr. Nataraja, had clarified from RB's point of view, though they are qualified as both. And as I already mentioned, that Mr. Subbarao, who is an all-rounder in both fields, in valuation as well as IP, has well compared or anchored this or moderated this webinar. And to start with, Mr. Ravi has explained how he chooses the values. He prefers an entity so that it will have pool of knowledge, etc. And Mr. Nataraja also has explained how he acts as a RV, his own experience in a real estate project. And he visits the site for practical view of the asset of the RP. And Mr. Ravi has explained that RV needs to send a request of all his requirements to the RP so that he will get all the information for the better valuation report. And regarding the management representation, the speakers had explained how they deal with it, and Mr. Ravindra Beleyur confirmed that he sent the MRL for the benefit of the RVs so that they can understand the the assignment clearly and their roles, responsibilities, then the information, etc. And there is a healthy discussion and participation from Mr. Prashant, Mr. Gajjar, Ankit Gajjar, Chandrasekhar, and from others whose names I might have forgot. And there is very good discussion on brand valuation, then enterprise valuation. Then Nataraja has explained, he raised the cases on relating to valuation. Then Mr. Beleyur has explained the latest developments in the discussion of the valuation report in the meeting of the COC, and what RVs are expected, how they have to explain the process, how they have conducted, how what they had followed, etc. And Mr. Prashant has explained his practical difficulties in valuing the assets. Though it may not be from SFC side, but it is a very good insight into the problems faced by the RV community as such. It is a very good participation from him, and I thank him especially for his sharing his experiences, so that we can also learn from him. And to the query raised by Mr. Chandrasekhar regarding the valuation of the inventory, the speakers has clarified what the position is. Now it is clear that SFP valuers only have to value the inventory, so we cannot avoid that. And then what my suggestion is that, say first you know the what you call the scope of the valuation, whether any assets are there, which are to be valued by us. And you assess yourself whether you can do that on your own or not. If you need the help of outsiders or experts, then you have to cost the offer accordingly. Then if you have to avail them, then you have to find out how much they are likely to charge, then load it in your bill, and accordingly you quote the bill. Otherwise, you have to incur on you from your pocket, which is not at all advisable. And moreover, we are also responsible for the third party experts' opinion. Though they might have given, but responsibility lies with the RV, who has embedded their report into our own report. So it is very, very important to keep this point in mind and quote the fees accordingly. And I also suggest to the request to the RPs to consider the fees for the valuation, keeping in the view of the risk and involved, then the time time taken, and this and need for the information and assessment, etc. Because nowadays I feel that say we always do not get sufficient information to provide the valuation report in time. So it takes a lot of time, a lot of number of mails, large number of calls to the RP to get the information. Sometimes they themselves are helpless because they themselves didn't get the information. Then as you know, that say financials are not updated, and he has to get them updated. Sometimes the books of accounts are not provided to him to go ahead with updation, and he himself doesn't know, say, what are the assets, what are the liabilities. Of course, this part we are not concerned, but say we should have, he should have the financials, books of accounts, and cooperation from the directors, which I myself have encountered in my own assignment. Likewise, I fully appreciate and sympathize the RPs. Of course, I'm both, so I don't know a little bit of it. And fee also should be considered according to the efforts made by the RVs. And again, finally, I thank the panelists, Mr. Ravindra, Mr. Ravi, Devarkonda, and Mr. Nataraja, and Mr. Kalva, Subbarao, and above all, Shilpa, for organizing this wonderful webinar. And I'm sure that this has this is very, very useful to all the
Organizing is not planning and organizing.
Yeah.
Just like what happened yesterday night, no, all of a sudden something happens and that is the organizing capacity actually.
Yes.
Okay.
Because see, she has to identify the right persons or
They can
right
do all that,
sources
right?
at the
That's true. That is
last
the
minute.
organization.
So that is very, very difficult. And say, if it is a pre-planned webinar, then say we can assess or we can identify the speakers with some thought. But all of a sudden, she has to identify them. Then she also
Yes,
has to
identify
gauge
topic,
whether
then speakers, both.
whether the speakers will oblige or not. Otherwise, she has to make, or anybody has to make frantic efforts to identify the speakers, to convince them, etc.
I would like to thank Mr. Ravindra also, he spoke to all the speakers and we coordinated in the short time. And I thank all the committee members also for their support. And thank you everyone for
Thank you,
making
thank you.
this session.
And thank you to Shivaprasad sir for summarizing entire session. Thank you very much.
Thank you.
Thank you, sir.
Actually,
Thank
I
you
have noted
everyone.
many points, but I have not elaborated in detail. I spoke in general.
Yeah. Thank you, sir.
Okay,
Right,
thank
sir.
you everyone. Have a
Thank
happy weekend.
Thank you.
Good day all.